We're going to talk about how a lender looks at your income if you're active duty or if you're receiving VA disability. I'm covering this today because it's a question I get a lot of, and it's also a really big red flag for if you're working with a lender that does not know how to do VA. Okay, so let's talk about this. Now, when I get an online application, it's always lumped together. So what I see is people take their base, they take their housing, they take their BAS, which is substance. Every time I say it, it sounds like a riddle. So we're gonna call it BAS because that's what it says on your paycheck. And they lump it together. If a lender is showing, when you guys get those loan estimates, it lumped together, that's not really how we do it. The way that we do it is we break it apart. So whenever I'm doing a pre-approval, I'm always wanting the LES because I need to know how much is in each category. So let's say that you get, 2,000 base. Okay, great. I'll put that in as base 2,000. If your housing's $1,000, I actually do it as 1,250. If your subsistence is $100, I actually do that as $125. Okay? And you're like, wait, why are you giving me higher numbers than what my paycheck says? It's because they're non-taxable. As a lender, when we're qualifying you, we're not qualifying you off of net, we're qualifying you off of gross. So whenever there's items that are not taxable, we actually gross them up. That's what it's called. It's called grossing up, okay? So this applies to VA disability as well. VA disability is non-taxable. Therefore, when I'm looking at that, because I've had people be like, wait, what you have is way higher. Yeah, I grossed it up because it's not taxable. That's within the lending rules. Now, it's important for you guys to know that you want to make sure that any lender you're talking to is talking to you about your debt to income, and they're also talking to you about whether or not they're grossing stuff up. So the reason is a lot of times lenders are like, you're qualified, and you're like, yay, I can buy this great house I never thought I could afford. You probably can't afford it. I mean, if you think you can't afford it, odds are you can't afford it. And as a lender, sorry, I'm allergic to Christmas, I think. I decorated my house and I've been sneezing ever since. So it's gonna happen in this video for sure. Anyways, but you wanna make sure you understand your debt to income, because if you have a lender that's grossing up your income, which we all do, if we know VA, I'm always gonna do it because it's accurate. I'm trying to be accurate. But then they're also maxing out your debt to income, meaning that they're pushing your file as high as they can to get it through the system. You could end up in a really bad position, because the thing about VA is, like, sometimes we see stuff approved that's like 60% debt to income. That's high. In a conventional world, it's really tough to get anything over 48. Usually 50 is the cap. FHA, we're not usually seeing stuff above 54, but with VA, I have seen stuff at 60. So you guys want to make sure the lender's talking to you about your debt to income. Personally, I'm always going to say, be as conservative as you can with your debt to income. The people who have great lives, are the people who have 20, 30, 35% debt to income. It's tough to have a great life at a 62% debt to income, because this is before taxes, guys. And this is all your money going to a house. Now, there are special circumstances where that higher debt to income may not be a problem. I have a client right now where that debt to income's high, but it's because we can't use her husband's commission income yet because he's not at a full 2 years, but he is making good money. So really their debt to income's like 30%, but I can't count his income, so it's 60. That's a time where it makes sense to go with those higher debt to incomes. It's called a compensating factor. If there's no compensating factors, I would not advise you guys do that. So you really want to talk to your lenders about, hey, what's my debt to income? Ask them. And if they're like, you don't need to worry about that, hang up the phone. Call Alyssa, call Sam or Jed, any of the gals on my team, call Julie. We will all be like, what? Debt to income is one of the most important conversations I have with people. It's the one conversation where sometimes, I know they have no idea what I'm talking about, but I will drone on for hours because I don't want you guys to end up how I was with my first house, where I was like, oh my God, I still remember getting the first bill. I had my son, you've probably heard this story before, but my son was a baby and he was 7 months, and I wasn't working because I was a stay-at-home mom. That was my dream. And I got that bill And we just, during the loan process, like my husband at the time, different husband, nice guy, he just, he's like, well, the lender said we could afford it. And I just remember opening it up. This was before I was a lender. I was so young, and just my heart dropping. And I remember standing at the mailbox and calling my husband with my baby on my hip going, there has to be a mistake. How are we going to do this? And then calling the lender and finding out it wasn't a mistake. We just didn't know what the hell we were doing. Horrible. Yeah, one of the reasons I'm a lender, Mama had to go back to work. So you guys really want to make sure you understand your debt to income. Just because a lender says you can afford it does not mean you can. And with this whole income, the fact that we're grossing it up, it's not a bad thing, because some people may be like, well, then don't gross it up. It depends on the circumstance. If I'm grossing it up and your debt to income's at 40%, great. It is accurate. You're not being taxed on this money, so it should be grossed up because that's the way it's handled. Now, I just want to throw one note in here because I know I'll get the question. We cannot use the GI Bill as income. I have a video on that prior, and that's because it's not something that's considered forever. So check out that video if you have questions. I hope this has been helpful. If you guys ever need help, let me know. And I'm gonna start every single VA Wednesday. We're gonna end the video with, I want you guys to shop your rates. Seriously, if you or someone you know is looking for a mortgage, I want you to shop that rate, because the stuff I'm seeing still is making me so mad. So please shop the rates. Thank you for watching. I hope you have a really great Thanksgiving tomorrow. Thank you.